An inverted yield curve has predicted every single recession since 1950 with 100% accuracy. To ignore it is to ignore gravity. We have seen the insider selling. This is a metric Kennedy would have loved. In the last 6 months leading up to today, January 2026, the CEOs and founders of the Magnificent Seven tech companies have sold billions of dollars of their own stock. Think about that. If Mark Zuckerberg, Jeff Bezos, and Elon Musk believed that their companies were going to double in value again, they would be buying. But they are selling. They are cashing out. They are doing exactly what Joseph Kennedy did in the summer of 1929. They are distributing their shares to the retail public, to the shoes shine boys, before the music stops. They know the crash is coming. They are preparing. Are you? So, how do we execute the Kennedy strategy today? How do we navigate the treacherous waters of 2026? We have to adapt his moves for the modern era. We break it down into 3 phases: the exit, the hedge, and the re-entry. This is the hardest step. You have to look at your portfolio and be honest. Are you chasing gains? Are you holding assets purely because of FOMO? The Kennedy strategy dictates that you must raise cash. You need liquidity. In a deleveraging event, which is what a crash is, cash is king. When margin calls happen, everyone is scrambling for dollars to pay their debts. The value of the dollar relative to assets skyrockets. This doesn't mean you sell everything and bury it in the backyard, but it means you take profits. If you have been riding the AI wave, sell a portion. Recover your initial investment. Move to short-term treasuries or high-yield savings accounts. You need a war chest. You cannot buy the bottom if you are trapped at the top. You need to be liquid when everyone else is illiquid. Phase 2, the hedge, hard assets. Here is where 2026 differs from 1929. In 1929, the dollar was gold. In 2026, the dollar is fiat paper. When the crash happens in 2026, the Federal Reserve will not sit idly by. They will print. They will print trillions of dollars to try and bail out the system, just like they did in 2008 and 2020. This means that while asset prices might drop in nominal terms, the purchasing power of the currency will be destroyed. So Joseph Kennedy's strategy of holding just paper dollars is risky today. You need to hold hard money. This means gold and silver. Gold is the ultimate hedge against a dying empire. It has no counterparty risk. It cannot be printed. It cannot be hacked. It is the only asset that has survived every financial reset in human history. When the stock market crashes and the Fed turns on the money printer, gold is your shield. It preserves your buying power so that you can participate in phase 3. This is the part that creates generational wealth. Joseph Kennedy didn't just sit on his cash forever. He waited for the blood in the streets. He waited until 1930 and 1931, when the Depression was at its worst. He bought real estate for pennies. He bought the Merchandise Mart in Chicago, which became the foundation of the Kennedy family fortune, for a fraction of its construction cost. He bought when everyone else was selling. He bought when the news was terrible. He bought when people said, investing is dead. In 2026, your opportunity will likely be in real estate and distressed businesses. As interest rates bite and the recession hits, commercial real estate is going to collapse. Residential housing and bubbly markets will correct. Good businesses with bad balance sheets will face bankruptcy. That is your moment. If you have your cash and your gold, you can swoop in and buy these assets for 50 cents on the dollar. You can become the landlord. You can become the owner. I want to close with the most important aspect of the Kennedy strategy. It isn't the financial mechanics. It's the psychology. To do what Kennedy did requires a rare kind of mental fortitude. Humans are herd animals. We are biologically programmed to feel safe when we are doing what everyone else is doing. When the herd is buying, we feel an intense chemical urge to buy. When the herd is panicking, we feel an urge to run. To succeed in the markets, you have to override your biology. You have to be willing to be lonely. When you sell now, in January 2026, while the market is still hovering near highs, people will tell you that you are wrong. They will show you charts of how much money they made yesterday. You will feel foolish. You have to be okay with that. You have to have the arrogance of Joseph Kennedy to believe that you see something they don't.